It's the same with crypto. What you're hedging here is not inflation, i.e. prices rising, which is usually demand or supply driven. What you're hedging is the debasement of currency, where your purchasing power goes down.
Hey guys, welcome back to the channel. Today we have Raoul giving us a market prediction for crypto and how the landscape is looking for the rest of the year. In the midst of the crisis that has seen many cryptocurrencies plummet, Raoul believes the crypto market is nearing its bottom. As crypto asset values continue to tumble, the former Goldman Sachs executive explains why he believes the market is on the cusp of a major shift, despite the fact that crypto is in full panic mode. Powell says that just like past cycles, many cryptocurrencies are going to zero. However, even if Bitcoin prices have fallen to a 2-month low versus the US dollar, 46% of Bitcoin owners are still profiting. It's easily outperformed all other assets over the last decade. The 17 best performing asset classes from 2011 and 2021 were tracked last year, and Bitcoin handily topped the list with a 230% annualized return. The Nasdaq index came in second on the list with a 20% annualized return. Let's check out this interview with Raoul as he tells us what to expect in the crypto market for the rest of the year. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Okay, let's go back one step. What is Bitcoin? Bitcoin is a scarce digital asset, and we either choose to accept it or not, right? Like everything, like gold it's just a metal, but the meme says we should accept it as something of value. So Bitcoin is a meme that is the digital store of value. But it is also a technology. So if we think of Ethereum now and the rest of the crypto space, this is a new tech of which we can use blockchain for a whole bunch of different things. So what we've got is this scarce asset and technology. Okay, great. That's worth something. The other side of the equation is, as you mentioned before, these however many white dudes, aging white dudes in the United States, set the monetary policy for the world, essentially. That liquidity washes in and out of markets. So when it washes out of markets, as it is right now, they're raising interest rates and they're reducing the balance sheet. That's taking money out of the system. So it's a game of musical chairs. So what happens is people are scrambling for dollars, and both, you see currencies falling around the world, but also people can afford less assets because there's less leverage, less money around. So the price of Bitcoin, Nasdaq, everything falls. I mean, literally everything, house prices. And the dollar goes up because there's less dollars around.
That's what's happening right now.
That's happening right now. So if we go back to 2020, what happened was massive liquidity coming in, plus debasement of currencies, quantitative easing. Right now, we've got the opposite of debasing of currencies. We've got quantitative tightening. So the currency is actually getting stronger, so the assets should go down versus that. But back then, we had like a 50% increase in the Fed balance sheet. We've never seen that much monetary expansion in the modern history of the United States. And so what happens is you then look at all of the assets, and what did best out of that was Bitcoin, or all of crypto. Why? Because not only, so gold did okay and equities did well, but Bitcoin did really well because you had both the technology bet and the monetary bet. And so it outperformed. So if we're in an age when the central banks are straddled, the global economies are straddled with debt, and this doesn't apply to India as much as it applies to the Western developed nations, is their only answer is to print money to avoid catastrophe, because who pays the debt? So the central banks backstop it. So over time, they're going to keep doing this trick because it's a magic trick, because it makes asset prices go up and everyone looks like they're rich. But you're not rich because you actually can't afford a house because it keeps going up in value because your wages don't go up. And the asset you need to own for all of that is crypto, because it's the thing that outperforms and gives you more purchasing power.
Over the last 24 hours, approximately $300 million in long and short positions have been liquidated across cryptocurrency markets. With losses accelerating, many analysts wonder if crypto will overcome market volatility. Retail investors were the driving force behind this movement during the last decade. However, sovereign wealth funds, global financial institutions, businesses, pension offices, governments, and other institutional investors are becoming more aware of the crypto market's potential.
But it's not inflation as in the rising cost of gasoline prices. It's to do with fixed asset inflation, houses, stock market, Rolex watches, and art, all of that stuff that's supposed to hold value, that goes up a lot when you debase the currency. All of these things with variable amounts, like your wages, don't go up, which is why the rich get richer because they own all the stuff, and the poor get poorer because they just get income, and income never goes up as much. So there's two schools of thought. The current strongest narrative, which is not the view I share, is that in a world that is deglobalizing, like we're taking Russia out of the world, we're trying to remove China out of the world, there's not enough, and also a world that's moving towards moving away from fossil fuels. We don't have enough investment in mining fossil fuels, that kind of stuff, and therefore any demand in the upcycle means that prices rise and we get inflation. Also, the fact that people like the US or the Europeans have to build factories in their own countries, i.e. onshoring, means that wages rise in those countries. And therefore, people are suggesting that prices are going to be stickier for longer. So they're saying the big narrative is, well, inflation's probably going to be about 4%, and therefore interest rates about 4% for another 5, 6, whatever years. And we've gone to a new regime. My argument is the regime looks confusing because we had the pandemic, we shut down the world, we reopened the world, there wasn't enough supply, so prices rose massively, and we're seeing the recession that has caused. Interest rates went up, prices went up, and the downside of that, I believe, is deflation. And I think deflation is a structurally larger force. Why? Because in the Western world, the population is aging. It's completely the opposite of India. So India average age is 28, the United States is 58, and Europe is older. So we have a record number of retirees. Now, if you've ever seen your parents retire, one thing they end up doing is not spend as much money. Why is that? It's just human psychology. You don't know how long you're going to live for, and you've got a fixed amount of money left. So the first thing you say is, oh, I need to stop spending because I don't want to be 85 and homeless. Right? So it's a really strong thing. So spending collapses, and so the economy tends to be deflationary. But then there's another mega power, which is globalization. Even though we're in globalization retreat, don't forget, places like India become the net beneficiary here. If China's not the great counterparty, then India is more neutral in the middle and is a more trusted counterparty with the rule of law, etc. So globalization continues, but maybe more regional. Okay. But then there's the really big super trend, and that's technology. Basically, everything that gets digitized goes to zero in value. I mean, everything. So cloud computing, computing power, computing chips. I mean, you name it, televisions, mobile phones, everything goes to zero. So it's an incredibly deflationary force. And that's only about to accelerate.
Raoul goes on to say that from a macro perspective, the stock market, as well as the cryptocurrency market, are both on the verge of experiencing a worse recession. Powell believes that the end of the year is when we will experience a proper bounce or bottom based on all the technical indicators he employs. He believes that many people are likely to panic between now and then, but if the central bank reaches the inflationary threshold, Raoul feels the Federal Reserve will have to intervene. Many analysts feel that the current banking system is on the verge of collapse, and that the fiat currency world will have to make a major adjustment, or else it will ultimately come crashing down. Raoul says he still sees the bull market ahead, but until we see what happens in the crypto market in the next 30 days, we'll have to wait and see. What do you think about Raoul Pal's interview on the crypto market? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.